Okay, I believe we are good to start and good to launch the session. So very good morning, very good afternoon or evening to everyone who found the time to join us today. We have another exciting topic and another great session of our mobility community, which we are running already for half a year with CVA. CVA is our key partner for this topic because they offer different types of solution and insights on mobility and other topics. We have decided actually to launch this topic and this community, especially due to the fact that from many of our members and many of institutions that are part of Qorus, which is a global banking and financial services organization, a global association of it, has come up, with an idea of how we can more develop the mobility ecosystem, what might be the future, what should be the role of financial services organization, and how to build an essential and effective partnerships between banks, insurance companies, and all the other ecosystem players in mobility to prepare for the future. Because we believe, it's happening in payment sector. We believe it's happening in fintech sector, in different areas of technological advancements right now that simply, traditional financial services organizations are facing a huge disruption. So the partnership is a way forward. Innovation is a way how we would like to, ensure it and find a new solution. And mobility community is exactly about this one. This goes far beyond just the usual and traditional financial needs of the organization and the solution that customers were used to. We need to find a new way of distribution models, as is the topic for today, and new ways of partnerships, which will be, the topic of our November session, and other subtopics that we believe mobility community has a lot to offer. So the community is running already for half a year. All of you are more than invited to join because, as I mentioned, this exclusive partnership for 2023 is bringing you the community live and for free. So you can join it, you can leverage on the fact of being connected to other peers across the globe, and even, to find peers or to find great partners to launch your business or to even expand it. So why Qorus communities, very shortly to mention, we want to create a global place or an online place for executives to exchange best practices, to identify the best case studies and trends across the world, and try to exchange those best practices with each other. Because we believe that only with the help and the inspiration from the other industry and from the other players, it's the way how you can fine-tune your own proposition and be ready for the market. So at the moment, we have 6 communities, as you can see, in front of you. Any of them are open for a financial services organization or organization working closely with the ecosystem. And at the moment, it's more than 700 members that we have included in these 6 topics. Good. Let's go straight to the point. You can see, very shortly for today's session, a couple of the buttons, on top of the screen, whether it is raise a hand, using chat function, or asking Q&As. Feel free to be as empowered, during this session as possible. We would like to create a session that is not only speakers' time to present and to shine, but we want to create a real discussion. So if there are any questions, any points that you want to raise, please feel free to do so. As I mentioned, for our today's distribution topic, we have excited lineup of speakers that we really look forward. So we'll start shortly with Amelia Bradley from CVA, who would like to offer a short introduction towards the topic and where do we see distribution influencing the current mobility ecosystem. We'll have a CEO from Ulity from Spain, Jose Ignacio Puente, who will share a bit insights from what's Ulity business model and how they are transforming the industry from a banking perspective of Santander Consumer Finance. We'll go straight to Credit Agricole Group and CA Autobank by Juan Manuel Pino, Dronet, who will shortly present their insights and exactly the solution that they have, and a former SVP from Stellantis, Ludger, Reggen, who would like to give a short insights on his perspective, experience, and excited journey that lies ahead. So without any further ado, let's go straight to today's session. But before I hand over to Amelia, let's try the first, interaction slide, the question to all of you. Please try to copy the link that you see in front of you, or go, directly to the Slido app that is on top of your screen as part of the Microsoft Teams solution. And the question is, when do you think a change in the OEM distribution approach will happen? So let's take this, as a really short intro question that all of you can just check the feature, try Slido if it is working well, and see some of the quick responses coming from your side. So we have 4 options. The change is going to happen within the next 2 years, or between the next 2 to 5 years, 5 to 10 years, or you don't expect that the change is going to happen. I see we have already 15 votes, so still we'll give you 10, 15 additional seconds, at least just to give it a try. Okay, I guess we are good to go. We have almost 30 responses, so it was quite fast. Let's have a look at the result. And right with the results, I hand over directly to Amelia, who I mentioned, is the expert on the topic from CVA, to shortly probably comment or share her view even on the first question, and then take over to give a bit introduction to the topic.
Yep. Okay. So I guess the question on sorry, I wasn't sure if I was meant to be able to see the response to the poll, but I guess the question on the when will it happen or not is a good one. I think similar to some of these topics that we've had in the past on this webinar, a lot of the discussion is around themes that have maybe been discussed and talked about already for several years in the automotive industry, but with quite varied perspectives on how quickly they will or will not actually come into play. I think when we talk about distribution model, if we are going to be a consultant and pull up some slides at the same time, I think if we look at distribution model in terms of its, let's say, expected development, I think it's something which players have talked about for several years. And the question is, how far will they go in changing a distribution model? So, excuse me, I think in line with probably the responses that we do now see on the screen, within the next 2 to 5 years being the kind of answer of expected change doesn't surprise me. I think we already see that a lot of OEMs have announced their ambitions to change the distribution model. We've seen different types of agent model testing in different countries, more or less complete. And I think what we'll now show in our slides on the topic is that part of the question is about how far does that distribution change go, and what kind of partners does it require in order to deliver on it. So if I jump straight into the slides. So I think here what you see on the left-hand side is a bit why is changing the downstream model and changing distribution a topic at all. And here we say that the reasons for change are for a number of different reasons. So obviously the customer expectations around more digitization, which we're all aware of, which affect the whole ecosystem, but especially also the distribution, especially for private customers via the dealerships, which has historically been very under-digitized. The shift towards EV and usage models, obviously, especially usage models, which change the whole structure of the value chain in terms of managing the asset. Somewhat increasingly volatile customer demand. I think especially in the last months, there have been some hints on the private sector starting to be a little bit more soft. And that follows a pattern where demand has been a little bit up and down in recent years, which has been protected by, let's say, lack of stock, but that is starting to come out of the market and obviously affects the overall efficiency required. Radically more efficient competition. So if you look at the, let's say, incumbent newcomers, if we can call them that, like Tesla, then obviously they have structural cost advantages, which then mean they can be more efficient in their downstream model. And then overall, there are a lot of different factors on which OEMs have to invest at the moment, which puts a lot of margin pressure into the system and means that from our perspective on the downstream model, the OEMs need to think about ways to maximally reduce costs, find new margins, and look again at the value balance between the stakeholders, which means also more significant integration with players like finance players in order to maximize those margin sources that they may have. Why do we say that this challenge is a long-term challenge for OEMs? Without looking at all the different bits on the chart, the point is here to say that even if Tesla today is not fully at scale, it is a sizable player in Europe. And if you imagine scaling it up to a significant player in the market, which obviously incorporates some changes in increased marketing spend, price reduction, needing to invest more in the kind of in-life capabilities of Tesla as well, it still has a cost advantage versus a standard OEM that's incumbent in the European market to the tune of nearly 10 percentage points, which obviously means for the incumbent OEMs, there's a very strong pressure that comes from these not yet at scale new entrants, but who structurally, even at scale, will be more cost efficient than they are. And the only way to really counter that is to go much more into an integrated end-to-end perspective on the value chain, and a much more integrated end-to-end perspective on value pools around the customer, which is what you see here, in terms of that it really is obviously going right from the beginning, from production all the way to after sales overheads, in order to then kind of manage the full life cycle. And what we see is that from a historic perspective, where OEMs really look at the, let's say, NSC box on the left-hand side, now they really start to try and put the whole picture together in terms of the relative costs and margins in order to optimize in a world where they can't rely so concretely on just the margins in the front end of the value chain. Now, when we talk about downstream transformation, I think one of the questions that there still is in the market is, where will the cursor end in terms of the agent model as a key component? So here, what we say is, obviously, historically, we've had the fully independent dealers. Now we're in a phase where some players are trying to implement, let's say, what we call a true agent model, which is really where the OEM is in control of marketing, RV risk, price setting, transaction management, and they basically set everything centrally in such a way that the dealer's role is more, let's say, a delivery and fulfillment one. Obviously, as I said, that requires a lot of additional capabilities that OEMs have not historically had. So some players are more focusing on a non-genuine agent model, which in a way gives them some more control on pricing at the very least, and some more control on the transaction and the customer ownership, but still leaves the dealer playing a large role in the actual sales and downstream delivery model. And where I think there are still some question marks on how to economically manage that in such a way that it's not effectively just paying the dealer the same amount in a slightly different structure, for doing a role where the OEM has slightly more risk. So I think there's still some question marks around the agent model and where it will really end up. What is for sure is that all players are saying that they're doing it in terms of, let's say, the significant players in the markets. So this is just an example for Germany. As you see here, the kind of transition phase is variable. So I mean, again, between 2 to 5 years is probably broadly where you end up. And then there are more, let's say, mass market OEMs at the moment who are still sticking with the dealer model. And the question is whether they work out a logic which makes the agent model also make sense for them and not only for the premium OEMs. And then just one last slide on the topic. When we think about where is it going to end up, we see two plays that might happen, and this is also where we see the, let's say, the opportunity for other players in the ecosystem and also for partnerships. So there's one play, which is that the OEMs manage to integrate end to end along that value chain, as I showed, with all the different components, and that they basically optimize their economics across the full value chain. and they work with specific partners directly. So that probably is likely to happen for some of the very large OEMs. And then on the other side, you have the dealer groups. There are some very big dealer groups in Europe, and the expectation is that at least a couple of those will manage to succeed in a more horizontal play where they take a very multi-make approach towards the value chain. They have a much more diversified responsibility beyond their kind of, let's say, core dealer sales model of today. And they basically become the customer owners, and they manage basically the OEMs interchangeably in order to maintain their customer value chain. So we see both coexisting, and with different players succeeding in different ways. But in order to deliver that with a fully integrated value chain, the solution is not to do everything yourself. So this is where obviously the role for financial service players comes in. So the need for wholesale financing, the need for insurance, the need for a balance sheet obviously increases massively for the OEMs versus their historic capability on this space. So looking for partners or working with their captives in that space is obviously key. Digital platforms and software to make the whole integration seamless with different players and also to enable more database products is key. Digital customer journeys obviously are fundamental. To some extent, integrated mobility offers as well play into this, but maybe not so directly on the downstream transformation, but more in terms of the, let's say, way to get customers into this more integrated value chain. But it does mean that it's a value partnership role. And then obviously anything related to trade cycle management, which again, the more you integrate the value chain, the more volumes you have to deal with, the more complicated this is for players who have not necessarily paid a lot of attention to this in the past. So that is where we see kind of opportunities also for financial service players to work with OEMs and dealers to build these integrated value chains in the downstream. That was a bit of a whistle-stop tour of some slides, but hopefully some useful information.
Definitely. Thank you so much, Amelia, for a very valuable, intro towards the topic. I think we can build on that even, with the next question that we have prepared. So very shortly, once again, prepare your mobiles and have a look, at the QR code that you see in front of you, or as I said, the slide button right on the top. So we have the second question, which we would like to shortly ask you, which is connected directly to the first slide or the second slide that Amelia was sharing. How do you personally assess the impact on the automotive downstream ecosystem? So again, 4 options that we see in front of us. Minor impact that you expect, relevant, major, or disruptive. Happy, if you go straight to the application and just pick one of the option according to your preferences and according to what you think is going to happen in the upcoming period of time. We have seen, according to the first question, that the change is about to happen in the upcoming 2 to 5 years, because most of the responders actually came with the response of 2 to 5 years. But even within the first 2 years, there was the majority of the people that think the change is going to happen. Good. So I think we can close it at the moment again around almost 30 responses that we got. So quite very nice and very engaging number. Let's have a look shortly at the results as well. So Amelia, do you want to comment on that, or is it expected? Is it the same that you see with many of your clients that expect the change happening?
Yeah. So I mean, I think it's not too surprising that no one says no adjustments needed at all, which I guess is a reality in, to be honest, most topics for automotive downstream at the moment. I think it's interesting to see that most people do see a point on needing to rethink the business model, because I think there has been at least some market perspective initially that the agent model and components around downstream value chain were just an extension of the as is. And I think that learning that maybe it's a little bit more significant than that has come in recent years. So I guess that's a little bit similar to what the poll suggests.
Very good. Thank you so much. So wonderful intro towards the topic. I think, right now we are all on the same page. So let's go straight to the three speakers that we have invited for you today. So the first one is CEO of Ulity, Jose Ignacio Puente. So Jose Ignacio, before we start, we have prepared 3-4 questions for you to a bit, understand the business model of Ulity, because obviously, it's something that we expect is going to impact and change the distribution model in the upcoming years. So can you shortly introduce Ulity? How do you operate? What's your business model? Where exactly? Because many of participants might know that your primary market is Spain, but obviously we expect that it might change in the upcoming years to come. Over to you.
Yeah, thank you. Thanks for the invitation. And I like this topic. I've been working in this space since 2014. I'm in Spain about 2 years. I'm from the US, where I worked on a lot of projects for auto and started a car subscription business in 2014. So I've got a lot of experience in the space. I've seen a lot of things happen with respect to, different attempts and efforts that have succeeded or some that have failed. I've been in, like I said, in Spain for about 1.5 years. I'm working with Santander, and we have a company called Ulity, which is a software and services company that is oriented to supporting primarily a lot of things that you just asked in these poll questions. The market is definitely moving. Nobody has a crystal ball on what's going to happen. And so our focus is to develop a capacity that's software driven to enable flexible term pay-per-use options for any type of vehicle in any market, anything from a new car to a used car to an EV to an ICE car, commercial vehicles, personal use. And we facilitate that through a proprietary marketplace that we call Wabi, which is a marketplace where people can subscribe to vehicles. And then we also provide our software to other partners that need to or have a need to have vehicles on this type of model for their consumers. It could be an OEM, and it could also be services companies that, like I said, need cars to deliver value to their business.
So we've seen, shortly the shift in distribution model in OEM, what we expect, to happen from Amelia. How is Ulity, navigating that change, or is trying, to adapt the model and find a solution to other players and institutions to help?
Yeah. Well, I guess I would say that I wouldn't say that we're adapting. I think that we're playing at the edge of the frontier here, because we're out in the market, speaking to a bunch of different groups. In the 1.5 years that I've been here, that we've been doing this, we've deployed our solutions in 8 countries in Europe, and we have 4 different categories of use cases, all the way from OEMs to, like I said, service companies that need vehicles for their business, and also through our proprietary consumer marketplaces for access to car subscription through car dealers. So, in the short term that we've been doing this, the amount of engagement that we've had is a very good example of the demand in the market and how the market is moving. So I don't think we're really adapting. What we're doing is we're making sure that we're taking into account the broad spectrum and making sure that our platform and our services all align to support, profitable businesses to happen for our customers and our partners.
Can you probably elaborate a bit more on Ulity's technology and platform? How it is, engineered to optimize distribution models, and particularly in response to the changing the dynamics we see in the market?
Well, we have a cutting edge technology solution that's basically on current market standards. It's cloud based. It's basically designed on a technology stack that makes it super easy to have integrations with third parties as we need to. As most of on this call, Europe has a lot of fragmentation based on different regulations and different things that need to happen in order to facilitate these types of things. So our technology enables a speed to market to either integrate with our partners or local, to be locally compliant. We have it basically structured in a number of different ways. We've got obviously the front end capabilities that provide the customer experience that are pretty extensive. They're not just about sign up for a car and pay for your car. It's really around a life cycle customer experience. That's at the core of our technology methodology. On the back end, we've structured around the operator to make sure that they can operate this super efficiently. Because as most of you know, in today's retail world, the value of the asset is the most important thing. And when you're doing these kinds of models, it's just basically RV management with OpEx. And so you have to be super efficient, and we use a lot of AI and data sets that enable us to provide our customers with the best level of insights to make the right choices, to know when to turn cars, to know how to price cars, and to deliver the right experience to the customers that are using the service.
Can you probably highlight some of the strategic collaboration or the partnerships that Ulity has already built to strengthen, its distribution capabilities in the sector?
Well, starting with the fact that we are owned by Santander, which is, got a massive footprint all over Europe, and we have lots of partners and lots of capabilities that we have in-house. We start there. We have an insurance business. We have obviously operations in every country in Europe. We have many, many OEM relationships. We're a major financing institution for the dealer networks in the dealers in the different countries. So we start there. Outside of that, and things that are outside of our scope of capability are things that are really more technically oriented, just to facilitate the customer experience. In some markets, we may partner with some local providers for some things like fleet management services, where we may have a few gaps in some of the capabilities that we have. But where we will likely explore and make some partnership arrangements would be with some of these charging networks, which we're not going to obviously go build charging networks, and have some integrations there, and to bring those benefits into the user experience and into the monetization model.
So in the upcoming period of time, let's say in the next 3 to 5 years, we've seen that most of the people are expecting that change to happen. So what do you believe Ulity will be, or what will be the role that Ulity will be playing in the next 3 to 5 years? What do you expect, that you will help the other organization to do?
Yeah, look, everybody wants to be the big winner, right? I think that we're very mindful of the fact that it's a massive market with a lot of change. There's a lot of uncertainty. There's a lot of things that you can anticipate. But I'll just start with why we call the business Ulity. Our view is that we're in the beginning stages of a transition from an traditional automotive retail transaction that's focusing on selling an asset at a margin, and we're moving into a space where it's a services driven model, where the asset value becomes less and less important, and the services and the value of the consumer is really where the value is. And so we intend to be a very big participant in that space, in line with all of our other strategies as a bank. What we want to ultimately do is make sure that when a customer engages with us for their automotive mobility needs, if that's what their motorcycle or whatever, that once they engage with our solutions, that it makes it really difficult for them to think about going anywhere else, because this is so easy and it's so tailored to their lifestyle. And in line with that, we also understand that consumers have other financial needs, and we can leverage across the breadth of our capabilities and value proposition to the market, products that are more financially driven and centered around creating value for the consumer, and less so on just monetizing and profiting off of a single asset. So that's our intention. That's what we're working on, and but we'll see how the market develops, and obviously our goal is to be the leaders in that space.
So exciting journey in front of you. Still a lot to do, as in every business. Probably we might have some questions from the audience, or some questions from the other speakers. Possibly, Marcus, do you want to elaborate shortly? I know you have prepared 1 or 2 questions as well to ask.
Yeah, I think the key question is probably, what is the biggest bang that the OEMs and the captives can get from you, right? And I mean, you answered to this already, but is it really vital for them? How is your vision on this? Is it a plus? Is it a nice to have, or does it go to the core of their future activity?
No, I believe it goes to the core. I mean, if you look at the most successful companies in the world, they're all centered on the customer and owning the customer and providing value to the customer. When you look at companies like Apple and Amazon, they have massive valuations, not because of how many transactions they're doing. It's about how many customers they have in their portfolio and what's the lifetime value of those customers. So I think it's essential, and a lot of companies are moving in that direction. The value proposition that, you know, our partners and the OEMs can get from us specifically is, you know, there's a gap with the majority of OEMs between the OEM and the consumer, and that's called the whole dealer network. And there's very few OEMs that have a direct-to-consumer model, and a lot of the ones that are attempting to are having challenges when they're, you know, trying to figure out how to sort all that out. What we have is we have obviously depth of expertise in the industry and the market, how the market works. You know, we work with dealers. We obviously are huge in the space as it relates to financing. At the end of the day, there's no financing, there's no cars. So we have a very deep insight into how that works, and we leverage all those capabilities, and we invest in technologies that make that process deliver that experience for our partners in ways that are more efficient than going out and trying to figure out how to do it on your own.
Okay. Any other questions from anyone? Good. If not, I think, you know, it was great pleasure to have you with us today, you know, to understand, you know, a bit more on the Ulity business model and how it can, in the upcoming, you know, future as well, you know, dramatically change the landscape in different markets across the Europe priority. But probably, you know, one last question. I know that Santander doesn't operate only in Europe, but in other geographies as well. So do you have, you know, the intention as well to somehow influence what's happening in those markets as well? I don't know. Yeah, when we talk about Latin America, I know quite strong presence of Santander. But as well in the US, for example, yeah, Santander has a presence in the US as well.
Yeah. Our ambition is obviously global, but you know, you know, as you know, like we've been talking about here, the market is in the early stages in transition. There's a lot of fits and starts. There's a lot of things, and so we position ourselves to where there's less friction. You know, I like to go where the water's moving, flowing, you know, and as those opportunities come up in these other geographies, we will certainly, you know, be involved in facilitating the service. In terms of our capabilities, you know, they are global, at least specifically as it relates to our technology solutions. They are global. I mean, we do have our implementation globally, so that's not a challenge. I did say when I mentioned the name Ulity, for us, the view is that mobility is really should be well, our view is that it should be looked at as a utility, especially when you look at electric cars. They're just portable energy pods, and there's so much unlocked potential in that as it relates to downstream revenue opportunities. So not only facilitating this transaction, but thinking downstream and saying what's likely to happen in monetizing these new things that are still to be determined are very much a core to what we look at and how we develop our capabilities and where we're going with the market.
Quick question from the audience. Do you have different engagement depending on the customer's age?
Well, it's interesting, you know, and I'll tell you just from a personal perspective, my view on this, I've always loved cars, and I've always loved to be able to this concept. I mean, you know, initially I thought people are going to really like the novelty of being able to switch cars, and you know, and be younger people that don't want to have a car loan. The interesting thing is that most people, you know, are actually within the 30 to 45-year-old age group. That's really where the bulk of the consumer engagement is. It could be through things, you know, given as affordability, but you know, that's really pretty standard, and we don't really see people really super motivated to just switch cars all the time. They really just like the ability to have the ease of access to a vehicle and abstracting themselves from the thing they hate most about buying cars, which is the whole financing part.
Yep. The financing part is usually, you know, pain in the ass for many organizations. We've seen, you know, a number of researchers saying that people hate or you know, love the least coming to the bank after dentist. So that's, you know,
well,
the
and then when you
challenge
think
many.
about all the other ownership things that you have to do, register the car, get insurance, get the maintenance, all those things, if you can facilitate that and give it through a very simple, easy to use experience where it's no hassle, then you've unlocked at least an ability to engage customers very quickly. It's what you do with those customers that really makes the difference. And like I said earlier, the key thing, and a lot of the reason why a lot of companies have failed in this space is because they haven't really understood how to properly manage the residual on these vehicles and all the associated things. It haven't been efficient, and it's just imploded on itself because you're trying to provide a service to a customer that has a lot of associated costs. You're incurring them all, and you're trying to still make money on top of that. It's just very tough. So, yeah, you know, we have some solutions that address that. So we can, you know, we can provide some solutions that resolve that.
Wonderful. Thank you so much, Jose Ignacio. It was fantastic to have you with us today. Great insights, you know, on the Ulity business model as a utility, yeah, as we mentioned a number of times. So great to have you with us. Please, if you have still, you know, time, we'll be happy, you know, if you stay with us until the end. There might be, you know, a couple of questions that you want to ask a couple of the other speakers we have in front of us. Thank you again. So let's go straight to the next speaker. So we have a short, you know, insights from CA Autobank by Juan Manuel Pino Dronet, who is Group Head of Sales, Marketing, and CSR. So, Jose Manuel, over to you.
Thank you. Thank you so much. Let me share the presentation and we confirm you can see it. Can you see the presentation?
All good.
Okay,
all good.
Thank you. So good morning, everyone. So yes, as Lucas was saying, I'm Juan Manuel Pino. I'm the Group Head of Sales, Marketing, and CSR of CA Autobank Group. And we are here to explain you what we are doing, how we do it, and how do we see the future of the automotive finance sector. So just to give a little bit of a background, who we are. No? Today, we are the only independent multi-brand Autobank company that was born as a captive. CA Autobank is a 100% owned Crédit Agricole consumer finance company that was acquired in April of this year, so just 6 months ago, being the former ex-FCA bank. So the captive company of the FCA group now becomes Stellantis. So this means for sure we have almost 100 years of experience, not myself, but within the company, and having the know-how about how to treat customers, about how to work with the customers and how to treat the OEM needs and how it works. No? So what's the footprint of CA Autobank? CA Autobank today is present in 19 countries through 2 brands. CA Autobank, that is working and developing the traditional retail banking perimeter, so the traditional loan, residual value loan, financial lease, all the banking perimeter, and Drivalia, that is the mobility player we are creating, because as we all see, it's true, today's subscription and pay-per-use and this kind of solutions are not plenty installed into the market, but we think is the trend and where the things are going. So we are developing those capabilities in all the perimeter in order to cope and to try the different ways the new customers are buying and are developing the business. As of today, we do work with more than 45 partner brands. We can see traditional brands like Mazda, luxury cars like McLaren, Aston Martin, but also new players like Tesla, that we are one of the partners who they work with within 10 markets, and developing also newcomers like VinFast, Lucid, DR. I mean, a lot of new brands and new businesses, not only automotive, also on the motorbike arena with Harley Davidson, Royal Enfield, leisure and auto caravan with Group Humor, Group Pilot, and others, let me say, and keeping some part of the business where Stellantis Financial Services is not the captive, like in Switzerland and other business. That is the reason why you see here the Fiat and Stellantis logos in some of the markets. So meaning a quite successful first 6 months of life of CA Autobank, becoming going from a full captive to an automotive independent player with a clear mission that for us is to democratize the green mobility. Today we see a big switch, a big change within the sales of all of the OEM, switching to hybridation, electrification models with higher pricing. So the cars are much more costly than in the past and not so much affordable for the general public, let me say. So this is why we want to call us the green bank that tries to democratize the green mobility, like FCA Bank Group did in the past within Fiat when he started his journey 100 years ago, trying to rent the first Fiat cars available to the general public. No? And this is really important because one of our ambitions would be by 2030 that 80% of our new vehicle in portfolio to be green, understanding green, full electric, or hybrid. And even if the sector and the segment is going this way, just because of the legislation, 80% is quite a great commitment in terms of fleet volume and new fleet volume to become it. No? And how do we want to do it? Because today, as we were listening before, we have different models based on the traditional distribution model through dealers, the new digital capabilities, the direct to consumer. And for us, this is key for sure. All the banking players today do work with the traditional model. We've seen our colleagues from Santander through Utility that they are developing also new things, and so do we. We also believe there's a big change happening within the market. And even if today is not fully developed, fully implanted in every market, in every brand, the reality is that we forecast that slowly we will see the brands going into this pan-European digital journey. I mean, it's something that today it's really live, and we can see within the Tesla example, no, fully digital, fully online, and not yet copied with success by all the players, but that is developing in this sense. And how do we work in terms of platforms? We have 3 layers that are pan-European. This means we have the same journey in Spain, than in France, than in Italy, than in Denmark, let me say. We provide CDFS, that to make it really simple, it's a wholesale finance system for the dealer network, for the brands, that everything is managed and can be done online, where we control through one single system, one single platform, the full European perimeter. So really useful for the brands to control, but also for the dealers to know where they are in each day. We do have CRFS. It's a retail finance system that includes from the more traditional point of sale with finance calculator, with pre-scoring capabilities, digital onboarding, and for sure, e-commerce. Again, we try to make it simple for our OEMs and our brands and our dealers, sorry. So we have the same look and feel and the same capabilities, even if we specialize products over the markets. Again, it's so simple that you just have to develop it once, and you can expand it with minor modifications into the different markets. So we have one really quick time to market capability. The last one is the same, but for rental, common rental system. So to provide through Drivalia rental and leasing capabilities, including subscription, used online car platforms, car sharing. So all the perimeter we are providing to our customer. For sure, as I was saying, it's multi-country, multi-language, multi-currency, and multi-device. I mean, we've been developing all of those tools over the last 10 years, and we think it's one of the main assets to being able to simplify everything for our customers. So with a single development, they got everything, not only on the retail or the wholesale, but also on the new mobility. And here we see some different steps. We've been talking at the end to launch what we call ourselves the ultimate e-commerce platform that is really easy to use, really easy to onboard, and we think has been really appreciated by the customers. But this is the present. This is something we are we are looking at today, but we are already thinking of the tomorrow. No, for sure, there's a lot of things going on today. And just to give some figures, no, the buy now pay later transactions will increase by more than 450 billion euros by 2026. And this is the new trends we're working on. We are developing new and innovative buy now pay later solutions, but not just to finance small goods. That is what we see today within the market, but to develop what we've called instant car and instant moto. So new banking and digital products that allow instant financing with just, let me say, 2-3 minutes of information from the customer. We're able to say a positive answer, and the customer can take his moto or his car within those 3 minutes, providing the basic data without providing a payroll. I mean, so just ID and his small banking details. And this is where we are focusing, because it's really useful not only for some brands. For sure, this is not a product to be applied everywhere and with every car. No, as I was saying, we are financing Aston Martin. This is not a product for Aston Martin, but probably yes, for small price, understanding small price below 40,000 euros car, or for motorbikes. No, that gives a really good advantage and quick time to market to the brand, but also to the dealers, because for the brands that keep having the traditional distribution model, this is a really quick asset for the dealer to do a quick sale, but also for the OEMs that are doing a direct-to-consumer product that is also available in this case if they have all the logistic to do it. No, but it's not only about acquiring customers, it's also about how we treat them later on, because as José Ignacio was mentioning before, it's really important to focus on the customer. No, and usually as banks, we've been really focused on acquiring them and sometimes forgetting what we do with them, how we communicate with them, how we treat them. So we've developed a dedicated platform just for customers. So even if today is not the major part of customers that are entering through those tools, no, a customer portal, we might say, fully digitalized, that the customer can do, let me say, 99% of the actions he may want to do with CA Autobank, he can do them through the portal. It's true that this is not the major part of customers that keep using the traditional email and phone, but it's growing, because as the younger population is getting into the finance or into the mobility sector, we see all of these grow. And thinking about customer is not only customers, the final end customers. No, we have also the retailers. That is really important. The agent model, traditional dealer subscription. At the end, we have to take care and support them. So we've also developed a specific tool for retailers, so they can have a control of where they are in real time, where the applications are, what is missing of something, how much they earn. So all of these kind of information also to support them in this new transition that for sure, as we were saying, we expected between 2 to 5 years, maybe a little bit more than 5, but for a full switch. But upon then, there's a lot of things going on, and we don't have to forget the traditional model. We are all developing a lot of things not only on the banking, but also on the mobility, that for us in CA Autobank Group is where the future will go through kind of Drivalia. For sure, we keep having, let me say, 10 years of traditional banking perimeter, but it will develop and will switch slightly and slightly as we see each year that the things are going through more operational lease. We see already a lot of customers going and trying some subscription model. On our side, we already did 35,000 subscriptions, but real subscription, I mean a subscription where a customer can jump in and the month after jump out without any indemnity or penalty to be paid to the company, with a different price. For sure, flexibility has a price. The thing is to find the correct price and the correct kind of vehicle to make it happen. So this is, in a nutshell, how we see it and how we see where the banking perimeter is going, and that we will be able to develop in a nutshell.
Thank you so much, Juan Manuel, for the insights, on CA Autobank. Do we have any questions from the audience? Please feel free, to write them directly in the chat, or I think in the Q&A as well section. There is a separate Q&A section. In the meantime, a quick question, from our side. So, from your perspective, what role do finance companies play in enabling downstream transformation?
I mean, it's a really important thing, because at the end, I don't think there's a simple answer to it, because each one of the companies, as we were listening also to Jose Manuel, that we are Jose Ignacio, sorry, to Jose Ignacio, we are trying different things. No one knows what will be the pace of this change. No one knows how it will happen, but the reality is that I took some figures. In 2021, the auto finance sector was 1.9 trillion euros and is expected to go to 5.6 trillion euros by 2031. So this means it will have a big impact. We will be the main player as the prices of the cars and the goods keeps rising. The acquisition of a car will be much more difficult, and mobility will be key. No, all the things that Jose Ignacio was mentioning and that we are trying to do also through Drivalia. No, so the pay-per-use capability, subscription, but the real subscription. No, you can take a car, you can leave it in a simple way. Will be fundamental, and also to develop digital tools. Not only the traditional digital tools that a lot of companies are just putting the traditional journey into a digital one, and this usually doesn't work. It has to be a native one, so the customer's understanding, it's simple. And I think it will go through this, to democratize, let me say, the mobility, so make affordable something that is becoming a luxury item through digital tools and through different products. No, we didn't found already what is the appropriate product for the future, where we all make money, everything works, and the customer is happy. But we are doing a lot of trials within the market, and sooner or later, we'll take the point.
Marcus, from your side or from any other speakers, do we have any questions? I see we have one from the audience again. So quickly to read it for you, Juan Manuel, which country you would say is the early adopter of these new mobility solutions?
I will give you my opinion on it and what we see within our company. So we always see the Nordic countries being one of the main early adopters of the new mobility solution, electrification, also because of the power of purchase, that they are much more advanced than the southern countries usually. So we are able to see the penetration of operational lease much higher the more you go to the north, and the penetration on EVs on the same side. But we see it's really growing, I would even say month after month, within the other markets, when we see the penetration of LOA, so leasing with the possibility to acquire at the end of the contract, and the different mobility solutions that Crédit Agricole and other players are putting. It's starting to work, but this doesn't mean, and now I will give you the input from our company, for everyone to know, we are an Italian-based company, even if owned by Crédit Agricole. Our headquarters is in Turin, in Italy. And our history and our major market, just because of the sales of Stellantis in the past, were really huge in Italy. About the 35,000 subscription I was mentioning we've done up to now, I may say that between 20 to 25,000 have been done in Italy. So it's not there's early adopters as generic market, but I think it's to find the correct product and the correct way to tackle it, to make it affordable, and to have the power, the gunpowder to make it knowable from everyone, etc. Because on our side, we have the same solutions available in different markets, and the appreciation is not the same in each one of the markets. So I don't know if I answered your question, but at least I tried.
No, definitely no. Focusing on more Nordic markets, this is something we want to do as well. For the next sessions, electromobility, will be next session in October. So I guess we should have someone from Nordics market to join. Another question: how many users do you have for your retailer spit?
Today we were doing the counting. In fact, some months ago about how many retailers. Today we are partnering with more than 10,000 retailers over Europe. So users, considering there's at least 2-3 users per dealer as a minimum, we can say 20,000-30,000 users within the retail platform.
Wonderful. Thank you so much, Juan Manuel. I guess, if there are any further questions, Marcus, you want to ask something, or should we move on?
No, I think for the sake of time, I would just like to confirm, thanks a lot, Juan Manuel, that indeed the discussions we have now in Italy with our players are very different from 5 years ago. So there's a dynamic in place that I think the more people have been lagging behind, the faster they go now. So I think they're all
right.
running
You're right. You're right.
Okay.
And we see this big change happening much more quicker than in the Nordics, because it happened a long time ago.
Yes.
It's now consolidated. And now we see, even if with lower volumes, but a rush into this. So
yeah, a
it's
bit the
catching
gold
up.
rush. Okay, so Juan Manuel, thanks a lot for this. Ludger, I think we can perhaps pass to the next person, also for timing reasons. And indeed, I would like to present Ludger Reggen, who actually is someone who has seen the other side, right? Because basically we have had interventions from bank service providers, but obviously what's interesting is what the hell is going on in the OEM's head, right? And so Ludger, I don't want to put the pressure and say you're going to say it all, but I think what's interesting is that you have worked in the German market with both independent players like General Electric leading their leasing activities, but then also for Opel Bank, and later for Stellantis. So I think it's going to be extremely interesting what you have to say on what counts for OEMs, who increasingly call the shots. So hi, Ludger. Thanks for being there.
Yes, hi Marcus. Thanks for having me in this wonderful presentation. And I think it's really a tough topic you are touching here, because things are really changing, and distribution of cars is only one element of that.
So indeed, I mean, your challenge is now to explain what is happening, and good luck with this. You have prepared the slides. So what I would propose is, why don't you take us through the concrete changes of what is on the way?
Yes, and it's to be honest, it's not so much, but it's touching the core of vehicle supply and transfer of ownership and negotiation power and data and customer ownership. So what's happening, and I need to underline that I'm not talking for Stellantis at all. I'm talking about my experience and what I see in the market and the trends which we have. And these 2 slides I have prepared, you will probably send it out as well, but it demonstrates where the problem is. And what today happens in the traditional dealer business is that, for example, configuration and negotiation is happening between the customer and the dealer. It's the upper left red box where you see, and the dealer has negotiated some discounts or has been provided some discounts from the OEM, but whatever he wants to put in the pricing, it's his decision. So he may enter a discount which gives him a very leaves him a very thin margin, or tries to negotiate a better margin for him, or he may add some and looking for some future income for this customer. So he can negotiate whatever pretty much he wants, as long as he doesn't make any loss. And he takes the order from the customer. This is usually the point where the credit check is done as well, if there is a financing in place. But then he places the order at the OEM. So he orders a car, and the car will be then the black boxes on the bottom produced. They will come to the NSC stock. They will be shipped to the dealer, and usually then happens the invoicing to the dealer, including the stock credit. And we talked about that in the previous point as well. But if we go to the next slide, in terms of timing, you see that the left box that is changing. So suddenly the OEM decides what the configuration of the pricing structure will look like. They decide what the campaigns look like. They decide probably with a very slight remaining piece of negotiation for the dealers what they can offer. And compared to the previous slide, it gives the dealer much less negotiation power. The consequence of having the traditional model is for the OEM, please quickly switch back, for the traditional model is noted on the bottom. So the OEM is not the owner of process, price, and data. It's the dealer. The dealer can decide, for example, what leasing company or what finance he takes in. There's no homogeneous pricing structure in the market. So one dealer in the north can give a better pricing than a dealer in the south for the same customer. So dealers are competing across regions, and the brand internal pricing pressure leads to, at the end, lower margin. But I need to underline, especially leads to less influence power by the OEM. And the retailer model, please go to the second page. The retailer model is then providing much more data ownership, much more power for the OEM to influence the negotiation, and that happens with one legal step. It's the sale on behalf of the OEM. So the dealers are not selling the car which they have bought before. They are selling on behalf, even if they send out an invoice, but it's on behalf of the OEM. So they are just retailers. They are not anymore independent dealers, and that influenced the whole process. And that's one element where the OEMs are taking control of the whole value chain. The power of decision is much stronger now in negotiating prices, in own the customer data, in follow up all these processes, which comes with leasing and loans, with insurance, with the whole maintenance and first life services, and also touches the point at the very end of the process change, the after sales, the residual value setting, and it changed the whole ecosystem. So your opening remarks, I think they are very, very correct. It's changing the ecosystem for dealers. It's changing the ecosystem for all participant parties, and that makes it much easier. Much more complex for the participants, but much easier for the OEM as long as they are able to steer all these. It's complex and it's not easy to steer, but it gives control.
So very interesting. So in the first life already, the OEM is touching, is deciding more on the services of the first life. That's what you say, and that's what you also show on your chart. Now that obviously is a large part of the first lifetime of the vehicle. Now the mobility services in that, because obviously the OEMs also go into mobility services, subscription and rental and so on. Is that a prolongation of that quest for value of the value chain? Does that work out? Do you have any vision on that?
Yes, I think it is. So what we've seen over the last couple of years is that the supply chains were difficult to manage, and subscription partners, subscription models, they became a quite reliable channel to sell cars. So they entered the market. They looked for new customers. Younger people who want to have mobility in a different way, and so on. But I have my doubts that this changing customer behavior is a main driver, at least in Germany. It was seen as a more reliable, a reliable channel to sell cars. But it gives the opportunity to the OEMs to earn a bit of money in that channel as well, at least when they own these players. So it's different for OEM related subscription models and non-OEM related subscription models.
Okay, so we talked about the first life, about the services, about the car. We talked about mobility. Now about the used cars, right? Because that's the island that remains. Now, what we see is that one of the players that Emilia mentioned, Mercedes, is now imposing to take buybacks. So they actually also control the used cars. Is that a trend that will be generalized? Do you have any vision on that?
Yes, I have my vision, but let me before I share my vision, let me first add some points. So what we've seen over the last years in the used car market, it looked quite promising. So we had a low offer on new cars due to supply chain topics. We all know we have a huge demand on used cars and high prices. So every used car which was coming back from a lease was sold very profitable. So it was a good situation to also earn money, and it was promising for the future. And that may have changed the setting of RVs. It has led to increasing RVs. Increasing RVs is low installments, so attractive rates on the market with high residual values, and the residual value is a promise or a bet to the future. And the used car market will now be normalized. So there are some changes as well, in brackets, electric vehicle trends and so on, and that may lead to lower results, probably even to losses. So carrying the residual value risk provides good installments on the one hand, but also a bet to the future and future risk. So looking if that is generalized, it may be generalized. So having control about the used car market, the future setting, is one of the targets of the OEMs, of course, to have control about the second life and to steer the price a bit. But the price is defined by the market. So yes, it will be a trend, but it needs to be managed very, very carefully.
Okay, so when I listen to you, I get the impression that it's actually a good idea that everyone who is in that ecosystem learns to play with the OEMs in order to see how they can cooperate, as they will definitely take at least some more control. Okay, good.
Absolutely.
So yeah. So after this, now we have gone through a long journey, Lukáš, and we still have one question to the audience, I think. So I think
Yep.
it's the moment to see what after having gone through all of this learning curve in this session, what people answer to the last question. Thanks a lot, Ludger.
Thanks a lot, Ludger. Yeah, thank you, Markus, for taking a lead on this one, because you knew a lot more insights to share. So let's have the last question to all the participants we have on the line today. One last poll, and I would kindly ask all the speakers to shortly share their views right after the question as well on this one, because I think it's exactly what Markus mentioned is very much connected as one of the key learning what we had from today's session. So again, please have a look at the QR code through your mobile phones, or go straight to the slide view, which is the app on top of your Microsoft Teams in the tool among the tools panel. So the question is, which capabilities will be decisive in partnerships with OEMs in the future? And you have this time, I think, 6 options. So balance sheet, financial capabilities, IT systems, data management or AI, digital customer journey, or business process outsourcing. And for this question, you can choose a number of options, so it doesn't necessarily need to be only one.
You can even choose all options if you want.
Yep. Good. I see that we have today very active audience, very quickly actually reacting to the question. Not happening very often. I think the topic is very, very engaging. So let's give it 10 more seconds, before we can comment on that. Good. Again, we are over 30 responses, so let's have a look at the response. And in the meantime, Juan, Manuel, or Jose Ignacio, Ludger, do you want to comment, on the question or your views?
So on my view, it will be a combination of a customer journey mixed with IT system, but also something I don't see on the slide, let me say, on the questionnaire, that would be flexibility. I think all of these new OEMs that are coming, all of these new distribution models, this new way of distributing direct with agents will require not only financial strength, digital customer journey or system, but also the flexibility and the will to adapt in a quick way. We see all the newcomers are not, or even old comers. No, I remember my old days within Stellantis with Ludger. I mean, it's not that they will wait a long time for development, because the customer needs and the customer behaviors are changing each time more and more quicker. And it will be this flexibility and the capability to have this flexibility one of the key drivers from my view.
Jose Ignacio, your views?
Well, I'll just emphasize what I said earlier. I think that, at least from my perspective, the primary focus needs to be on customer lifetime value and creating a solution where the customer can't think of going anywhere else. And if I'm an OEM, I'm thinking about that and making sure that I have a product portfolio that meets the needs of the customer, that has the right touch points, so that, you know, when I go wherever I go to consume mobility, I don't have a fragmentation. I don't have one experience where I walk into a place and I'm supposed to get something and I get something else. Obviously, that's going to require a lot of logistical work, a lot of partnerships. It's going to require a heavy investment in data and data understanding, and making sure that you can harmonize all those things in such a way where it can deliver great value to the consumer, but also generate profit. I think it's going to be more about how much money can you extract per mile than from an asset, how much margin you can get on an asset.
Ludger?
Yes, two points. The first is, I think it's with the IT systems, data management, and AI. Sorry. What we need to understand is the disruptive power what is in artificial intelligence in our market, and that comes with one question. Let me phrase it: elephant in the room, which we are not talking about, is the real demand. What we all know is vehicle or mobility on demand. So what will the future look like if we are asking for something, maybe a car, maybe a bus, maybe something else, which brings us from A to B? How will that happen? And in this case, you mentioned Tesla. Sometimes they are far ahead. If you read to the strategic papers from Tesla, which are openly on their homepage, Tesla will stop selling cars in the day when full self-driving is allowed in Germany, because then they have some 100,000 of taxis available, and you as a private person who owns a car like this, you can be part of that. You can earn money while your car is not used by yourself. So I think this is where we have to look at in the future as well. It's probably one piece where we can spend another session.
For sure. AI right now is driving the change in all the industries. We discussed that, a lot happening in digital reinvention community, but as well, mobility will be a space for that.
Definitely. Look, if I can just one remark is, this is exactly the opposite what you would have had like 10 years ago, if you look at it, right? Because 10 years ago, for those of us who have been around that long, the way that players defined in the ecosystem was by balance sheets, right? That was the important thing, because it's a portfolio, those are the earnings. And then the customer journey would be something that you need to tweak. But, so I think it shows the enormous change which has gone on in the last years. And I think it's quite impressive. So I really like those results.
Great insights, definitely. Really appreciate, all the speakers and insights we get actually for today's session. So before we call it the day, we have one question. Let's take that as well. Before we close. So Jose Ignacio, we have a question from the audience. What percentage of your end customers keep the car for more than 1 year?
Okay. So I don't look at it as how long they keep a car. I look at it as how long they stay in the program. And on average, we're pushing over 12 months. Most people that are signing up, because we give them the option when they sign up, and it's not to a specific car, it's to the program. Most people, and it varies by country, but like, for example, in Germany, the majority of the people sign up for 18 months.
Good. So that's the average, what we see in most of the markets. Thank you so much once again, for all the insights. I'm sure that if there are no further questions, which definitely there will be from any of the people, please feel free to reach out, to any of the speaker or the organization. I'm sure that they will be very open and happy to share some of the further insights or exchange best practices. Upcoming events that you see in front of you: 25th October, we'll focus on electromobility, 29 November on the partnerships, especially on the insurance side. And yeah, don't hesitate to go straight to the website where you have all the information, where you have, also the insights being shared from each of the events. So we have our dedicated copywriter who always put together the key highlights from the session, without making it too personal to any of the speaker, but highlights what we have learned, what we have seen, what we expect the general direction. So visit the community website, have a look at the content, join the upcoming events, and please, if you are open to join as a speaker or to share one of your case study, reach out to us. We are more than happy to have any of the organization to share what they are doing as part of the change happening in mobility ecosystem. We are running an interview series right now, or interview series globally, to explore the future of financial institution mobility ecosystem. If you are interested, yourself to participate, please contact us. We would be really happy to have your insights, highlight your institution, spotlight what you do personally, because you've heard a couple of the speakers as well today or during the last couple of sessions, and we are right now already in the phase of publishing some of them on the website. So I think it's fantastic, to have insights as what other executives think of the industry, where they see it evolving. So next steps: check the QR code, become a member. We will be happy to have you. There are no, at the moment, any commitments coming out of it. It's open, it's free to anyone. It's the place where you can definitely, find best practices and exchange information. So that's I think, that's that from our side. Do we have a real question or raise hand from Frank Hillen, or is it just, by coincidence? Okay, it was just probably by coincidence. But anyway, thank you so much, for all the engagement and activity we've seen today. So Jose Ignacio, thank you for your time to present and be part of the session today. Juan, Manuel, same to you, and CA Autobank, and Ludger for the last minute, engagement as well, to use your experience and insights, from Stellantis and other institution you have been part of. Thanks to CVA, because without them it wouldn't be possible actually to put this wonderful community, insights, speakers, and topics together. So Marcus and the team, thank you so much. Have all a wonderful day. You'll have access to recording, to the presentation, to speakers, and see you on 25th October. Have a good day.
Thank you very much.
Thanks a lot, and bye.
Thanks to all. Have a nice day.